Good morning and welcome to FP Markets Daily Market Update, coming to you live from our Sydney head office. Right, interesting day in the stock markets here in Asia Pacific, really. So probably hardest hit across the board. Looking down at the moment, ASX 200 just $2 down from us. Finished up nearly 1.5, just shy of 1.5% down there, 1.47% down. And we've seen a couple of different moves on the markets, but a big focus coming through still onto the Chinese property giant Evergrande and their ability or lack of ability to pay some of their bond interest rates. This is sort of weighing on the market, well, fairly considerably at the moment as well. And some investors are looking and some commentators are looking for a reason for the extremities of that move. But as you can see there, the Hang Seng's had a bit more of a stellar day. So a little bit of variation across those Asian markets, but we've seen moves coming in over the last few days where volatility certainly seems to be picking up across both across all markets really. And I'll highlight them, especially as we go through some of the currencies that we've been looking at. And maybe the opportunities to see some breaks coming up, especially this week with such a high amount of central bank talkers and big players in that central bank market as well. So obviously I've moved over to my Aussie chart, and the one central bank we're not hearing too much from is the RBA here in Sydney and in Australia. But we have seen the Aussies remarkably perky, up around 73 cents again. Considering what we've seen in the stock markets and its normal close correlation with risk on trades. As you can see here on that longer term chart, just remain bids, bounced nicely off this sort of longer term trend line, and it's just peaked above this level again. This is not really specifically great trend line, isn't it? But what the feeling in the market is that there is, and have heard a fair amount of this today, that there are some decent sized strikes around 73 the figure, and there's no surprise to see it trading at 72.97 at the moment. It's not really managed to break too far through there over the last week's trading. If we can get that strike pollution out of the way, then we might see the Aussie start to move and start to move fairly strongly. That is likely to be in line with the major dollar impetus, or in fact the risk impetus as it comes through later in the week. Just moving on to our cross Tasman cousin, and as you can see, the Kiwi is trading just above 70 cents there. A little bit of action in the options market there. A similar pattern, probably not as strong on the longer term charts as the Aussie, but there's been a little bit of flow. Heard a bit of flow going through Aussie Kiwi, a fair amount going through that cross. Still, those Kiwi desperate for that parity party coming forward. It was looking good until sort of the pandemic hit. New Zealand, Auckland still in lockdown, so it could be a little bit of a race there, but parity party still in the minds of mainly the Kiwi traders really, but the Aussie Kiwi traders. Sterling, great moves, and once again we're expecting moves in sterling, and probably the cable's going to see maybe double influence this week. We've got a lot of Fed members talking. So yesterday we heard from we heard from member Evans. He was chatting, but today we've got a fair few more. Williams is speaking, Brainard speaking. We've got the Bank of England Governor Bailey speaking as well. So all these guys, and it does seem to be a real week for this. I mean, Bailey's just speaking. He's speaking at Societies for Professional Economists annual dinner in London. So I suppose there's probably going to be a fair amount of depth to that chat, but if he does give us a little bit more forward guidance, then we could see sterling off to the races. It has been pretty whippy, as we've noticed. 139's capped it, or just above 139's capped it over this month so far, and we've been all the way down just last week to just north of 136. So plenty of movement going on there. Obviously ECB action as well this week. So plenty of people talking, Lagarde speaking. We've got really the big chat today, I think, is going to be Lagarde. She's delivering the open remarks at the ECB forum on central banking. It's all virtual or online, I should say. But we could see euro moving, and then, as I said, just looking over to those euro charts, we are back to those recent lows. Now, interesting link up with that and where the dollar's trading, or more importantly, the 10-year yields. Euro is just bouncing off this line where we've seen lows, and obviously we've had previous lows just at the end of August down under that 116.70. We're only like 20 points above those levels. I think if we could see dollar accelerate, Euro could be the main catalyst. And I was talking about those US 10 years. Having a look at this is that longer term chart we were talking about a couple of days ago in this sort of meeting. It's played nicely off this sort of longer term trend line, but that had played off fairly well. The resistance trend line had come in there, and we have seen a break above it. We are back above to sort of new highs in this quarter. 152.70. I think a firm break here could see us moving back towards those highs that we saw back in Q1 2021, 1.8%. That should tie in with some dollar strength across the board in the currencies, and it could tie in with a break in some of the majors, and Euro could be one of the main ones. As I said, the levels we're looking at here, you can see them here as well. It does look like open space if we get, and the reason that could be from the Fed, could be from the ECB. So plenty of action coming later in the week. I think one currency we've already seen a decent break in over the last few days, and that is dollar yen. If you look at this, like that rise from 109.20 up to two big figures now, 111.30, a little bit over two big figures. 111.30 is a really good move. Even trading the break of that form resistance trend lines worked really well. Looking on the longer term chart, and this is something I noted when we were coming this morning, we are approaching that longer term resistance. Yes, we had highs, just above 111.50 in July. We could be attacking those levels, and once again, I think we're probably looking to the Fed rather than the BOJ. We also do hear from the BOJ's Kuroda this week, so plenty of central bank. As I can't reiterate enough, because every time I look at the calendar, all I'm seeing is central bank speakers and sort of a dearth of real decent tier one data as well. So I think, dictating what we're going to see ahead this week is central bank action, and that's what a lot of traders, a lot of long-term punters have been looking to see, some real movement on the in the currencies, on interest rate differentials, starting to see those big moves coming through. Looking at the CAD, really dictating. CAD moves have been dictated. We've seen strength in the CAD. This has come with oil. Oil's moved massively to the top side. We've had a decent run up. I'll show you the chart on that in a minute. Still some supply problems. Still expectation that demand will grow as we come out of pandemics. Some good signs in Australia today, actually. So moving back to that Aussie market. Obviously, the local stock market took a bit of a hit, but the Aussie dollar's staying supportive. Roadmaps out of lockdown, really, from the two key economic states of New South Wales and Victoria. Those have sort of added a little bit of buoyancy to the currency, whereas obviously I think the overall risk-off attitude across the rest of the regions hit that ASX. Swissy trading sort of fairly moribund, in a very moribund fashion, knocking about in the ranges. But once again, I think if we see that move in the euro, if we see a break, or if we see it sort of jump back into the range, from whatever we hear, if we do hear more hawkish or less hawkish comments from Jerome Powell, or indeed anything from ECB President Lagarde, then I think that's where we could see some decent moves. But Swissy is sort of in a wait and see type pattern at the moment. Right, here's that move I was talking about earlier. This is oil. Oil's jumped now, broken through, and it's just capping out not far off that sort of $77 a barrel level. There we go. What we're up to now, high 76.50. High that we saw back in July. Been another pretty meteoric rise, really, from $62 a barrel all the way up to 76.5. If we can break through there, and it could come from the supply side of things, keep an eye on any news out of OPEC and Saudi Arabia in particular, which I think sparked our last move. That should then translate through to maybe some more CAD strength. You see CAD's just flirting with this 126, the figure level. It's been down, it's been up. Possible of some, once again, strike pollution is what we look at. Some of the crosses are very interesting with CAD. Euro CAD's been sitting nicely on this much longer term trend line. Lows coming in May earlier this year, 145.74. We're sort of less than two biggers from that, and that's on the dailies. could see some interesting moves there. Obviously, CAD yen's had a massive move. That's on the back of this strength in the CAD and weakness in the yen. So a cracking move in that cross as well. But plenty going on across the markets. Just, I suppose, finishing off on gold. Gold's probably the one that we've seen like a little bit less in the way of volatility, which is unusual, and also obviously one of our highest and most popular traded products here at FP Markets. Hanging in, we're finding support, I suppose, just below that 1740 level. As you can see on this chart here, it's sort of like, this is obviously the short-term hourly, but we've had lows, 1740 again here, just under 1740. That slightly longer term support line is coming in just south of 1720, but a big move there, and that could come either from a very serious risk move, but I think probably what we're looking for is some real forward guidance from the US central bank, and if we get that, I expect to see gold sort of move out of this what's actually a fairly limited trading range that we've seen over recent weeks. So that's pretty much it for today. Good luck with your trading. If you need anything from us at FP Market, please do contact us. Obviously, we're contactable, email, and all the usual chat functions. But good luck with your trading today, and join us please for the next one. Thanks very much. Cheers.